Hi everyone, this is Mike Kramer of Mott Capital checking in. Today is January 8th. It's about 7 p.m. New York time. So lots have transpired in the market since the last time we spoke, but we'll try to get right back into things today by starting off with the euro and going through a bunch of other things as well. So the euro has rebounded some over the last couple of weeks. It's been, generally speaking, strengthening versus the dollar, although we've seen a little bit of a trend reversal here in that back around the 28th of December. And what really stands out with the euro at this point is that we see that the RSI is clearly trending lower while you have prices that are higher. We can see that there was a high here and a lower high here with a high here and a higher high here. And this is a classic bearish divergence, right? And so this is something we're going to want to take note of and see how this persists. Also, we can see that, the RSI hit very oversold levels at this point. Then we hit very overbought levels at this point. And right now it appears that we're breaking this uptrend and we are seeing a bit of a change in trend. The other thing of note, which we've used very well in the past, is the 10-day exponential moving average, which we broke below here on January 2nd and have basically now been below it for a few days. This is really the key, I think, to the direction of the euro over the very short term. If we remain below this exponential moving average, I think it's going to continue to tell us that the drift and the pace for the euro is lower, right? And if we were able to get above this 10-day exponential moving average, it probably suggests there's further upside here back to this 110 area, which has been a pretty big level of support and resistance in the past and is worth pointing out. Likewise, I would be looking for a potential move down to this 109.20 to even lower trend line at 108.57 if this 10-day exponential moving average continues to serve as. When we swing over to the pound, we can see it's a very similar sort of setup with the bearish divergence taking place between price and momentum. Clearly here, the pound has been strengthening versus the dollar despite this bearish momentum, while the pound has also been using this 10-day exponential moving average as sort of a support and resistance zone. So I think it's a very similar setup. As long as we stay above the 10-day exponential moving average, we have further upside to around this 128.25 region, while a break below the 10-day exponential moving average potentially sets up a further drop back to this 126.09 region. It's really going to be important to see, though, how this continues to transpire, because the momentum in both of these is clearly telling us that the dollar has potentially changed trends here. When we look at the yen versus the dollar, it's the same thing where we have this moving down yen, but you can see the RSI making, bottoms here, basically 28.74, then you got 28.57, and then here you got your higher low. So this is also a classic bullish divergence, and here's your big trend line. We obviously broke above that. Now you can see we're also breaking above the trend line and also breaking above the 10-day moving average. I would expect that the 10-day exponential moving average served as support around 143.46, and I would think that we're probably going to see the yen continue to weaken versus the dollar, potentially pushing back up towards this 146.09 area, which would also be the upper end of the range. When we just keep moving on, if we move into equities, we can take a look at the DAX. Now, the DAX is also showing these interesting signs here where clearly we have a RSI that is trending lower. As of right now, we also have two lower highs here and lower lows. So there's definitely a potential here for the DAX to be reversing trend. What's noticeable, though, today is that we were able to notice how this 10-day exponential moving average was also serving as support. We clearly and decisively broke below it on the 3rd. We were below it for 2 days, and now we've come back above it. And so what's going to be interesting here is that if we are in some sort of reversal of the trend to something that the momentum would suggest is lower, then we would expect that we wouldn't stay above this 10-day exponential moving average for more than a day or two, and that more likely than not, we would find some sort of resistance in this area around 16,779. If we were to break above 16,779, then I think you're talking about, retesting this sort of double top here at 16,961. And that's really going to be your key, because if you can get beyond this 16,780 region, I think that's clearly telling you there's more upside. And really the clues are going to be coming whether or not tomorrow you break back below this 10-day. Because if you break back below the 10-day, then that's going to be telling you that the trend is lower, and that then I would be looking to take out these lows at 16,450. Now, the U.S. markets had a pretty positive day today, but it wasn't reflected necessarily in the Dow, because you had a big down day in Boeing, which is a big Dow component. And then, of course, you're also going to have UNH reporting results later this week, and UNH is the largest Dow component, and we can see that UNH really hasn't done very much in recent months. And so this is going to largely tell us whether or not the Dow is going to be able to continue to move higher, because you already have one major Dow component that's struggling, which is Boeing. And now, you're going to get UNH reporting results on Friday. I mean, we came right up to resistance today at 37,696, called 37,700, and that's where we stalled out. Also on the Dow, notice that, the RSI is already back over 70. So it's been extremely overbought. It became a little bit less overbought, and now it's back above that 70 region, which is a sign of an index that's overextended. Notice the Dow got below the 10-day exponential moving average, but just slightly. So I would say in this case, it's really acted as support now for some time. In fact, we haven't really been meaningfully below the 10-day exponential moving average since October 31st. So this is still sort of our key level to watch, is 10-day exponential. If we were to break below it, I would expect to see a break below 37,250. With the potential to move back down to this lower region here, which really served as the old all-time high at 36,800 or so. But again, it's going to largely depend upon whether or not we can break and gap above this level tomorrow. Obviously, if we gap above 37,700, that's going to pave the way to potentially take out this high here from January 2nd. And potentially push the index even higher. But again, that's basically a quick summary of what's been happening at least over the last couple of weeks, and so we'll have to kind of just keep track of where everything is going from here on, and take it day by day as things develop. We are going to get a lot of data this week, and you are going to start going into earnings season here in the U.S. with the major banks and United Health starting to report results on Friday. So there's a lot of pieces that are going to start moving around, and so I think things will potentially start getting a little bit more interesting as we go through the rest of this week, and then obviously over the next few weeks. So have a great rest of your day, and we'll see you soon. Bye.